Hi guys, welcome to this video. Here we'll be discussing about 6 different intraday strategies that you can use. These are basically execution strategies. So you'll be working with a list of stocks that you've already pre-selected. So you'll have a small list of stocks. So these all 6 strategies are going to be price action based. They're not going to be using any indicators which I believe are lagging. So we use indicators only to come up with a list of stocks. So I have another video where I teach 4 different strategies where you can use any of these indicators and come up with a list of stocks to be traded for the next day. So at the day of execution, you need to look only at the price. So all of these 6 strategies are going to be price action based, and let's just have a look at all of these. Okay, here we are now. In the previous video of this series, what we saw was how you can come up with the list of stocks the previous day by using any of these Keltner channel, RSI or Bollinger Bands. So this part is coming up with your list of stocks. So this is done, and now you need to have a execution strategy to watch all these stocks which you've shortlisted here, and how you can enter the trade and exit the trade based on these strategies. There are going to be 6. So let me just add them one by one here. And the first one is going to be previous range breakout. So as you can see, these all are going to be price action based. We are not going to use any kind of indicator in this strategies. And ORB is opening range breakout, and open high or open low is the third one, and the fourth one is going to be inside bars. This is going to be intraday inside bars. And we are also going to use moving average. So moving average is a price action based, but it is not really an indicator or it's a lagging indicator. It's just it gives you the average of the price in the last few candles. So we still consider this. And the final one is going to be something called fractal. Fractal breakout. So these are the things we'll be explaining. I'll be explaining one by one. Okay, here let me take this ICICI Bank as an example. And if you remember from the last video, we are using one of those methods is to use Keltner's bands to look for compression. So what I've done is I've just quickly marked those days of compression. So that means that we are open to trade these stocks the next day. So these are the days, if you can see here. And there were just around 6 days in this month of September. Okay, so that is how powerful this can be, because you do not need to be looking at ICICI Bank the whole month, right? You just need to have look at the charts only on these days where it triggers in our compression zone. So I'll just go ahead and remove, and I'll remove the other indicator as well, because that is my custom pivot bands that I use. Okay, so these are the days where we are going to be trading ICICI Bank. So this was the day that triggered, and we'll be looking at trading today. So okay, today was okay. So what we'll do is, first strategy is, as we saw, it is going to be a previous range breakout. So what does that mean is that it is as simple as you're drawing lines on the previous day, and you're changing your chart to a lower time frame of 5 minutes or 10 minutes. And whenever there is a breakout below this previous day's range, okay, where there was a strong close here, so this is where you'll be initiating the trade. That is what is previous range breakout. So that is the first method, which is previous range breakout, where you'll be marking those areas of a previous high and low, previous day's high and low, and whenever there is a breakout of the zone, that is when you'll be entering the trade. So this was the trade today, and if you look at this other day on 25th, let me remove this. So 25th started here, and this was the range. This was the range. So the next day, even the first candle closed above, so that is when you can just go and go long. And let's look at the other day. Here again the first candle is closed above the previous range, and this day this is the range, and in fact it took a support, and it is, as it is going up and close above, this is where you enter your trade and you would have captured this move. So you can see you can just go and test it on some stocks. It works on liquid stocks, and you need to do it yourself. You can just find a list of stocks that this can work. And this is the first method, which is previous range breakout. Let's move to the next one, which is opening range breakout. So that is again it is going to be simple. Opening range, you can decide on a range either 15 minutes or 30 minutes, and you can just plot the range. So in case of 15 minutes, it is going to be the first 3 5-minute candles. After the first 3 5-minute candle, you're going to mark those range, and whenever there is a breakout of that range, you need to go and enter the trade here with the stop loss above this. So you can come up with your own execution strategy based on this, but this is how this opening range breakout is going to work. And the next one is open high or open low. So whenever this triggers, all you need to look for is either open high or open low, and you're going to enter a trade in that direction. So in this case, it did not occur. It did not make any open high or open low, and in this case it is almost like a open low, but we're not really sure. You need to check in the 30 minutes candle to be sure. Okay, let's just check here, and even in this case it's not open high or open low, so it didn't, no trade triggered. Okay, here the trade got triggered because you can see there is an open low, and here it didn't get triggered, and here it got triggered. You can see a open high. So whenever your shortlisted stocks makes open high or open low, then that is when you need to trigger. You can keep a time frame of around 15 minutes, maybe. Yes, 15 minutes would work, and you can do that way. And the next method is going to be inside bars. For inside bars, again we are going to be using 30 minutes time frame, and you're going to look for any inside bars that is formed in intraday. In this case, there was inside bar here. Inside bar is formed here, so you can just go and place an order above the inside bar whenever there is a breakout with stop loss below. And you need to have a risk reward ratio of 1:1 or 1:2, whichever works for you. You need to keep that, and you can trade using that strategy. So you need to look for inside bars. Intraday, there was one here. You need to place a order here, and this is your target. The range of this inside bar should be your target, and that is how the inside bar strategy works. And the next is going to be moving average. So for moving average, you can shift it to 10 minutes or 15 minutes, and you can use this moving average of you can use exponential moving average. And 13, and you need to make it as a band instead of a moving average. You need to make it as a band of high, and you need to make one more moving average, and this should be of the low. So what you're essentially doing is that instead of having a one moving average, which is usually based on the closing price, you're making a band of high and low. So it is a band, and you can see whenever there is a close below, 1 or 2 closes below the band, you can just go and enter the trade in your direction. You can see here there is 2 closes above the band, so you can just go and enter the trade here, and you can see similar kind of trades happening in the other places as well. Okay, now here let's see the concept of fractals. See, fractal, what it means is that Fractal is a place where the price is calm and it is reversed. So this is something called a fractal, and this is a fractal. And there is an indicator which you can readily use to identify these areas. Like if you can see on this day, since it was a compression day, we need to mark the lines at the last fractal. So it was here, the up fractal is here, and the down fractal is this candle low. So mostly it will be almost same like the day's high and low. In some cases it will differ. Say in this case, the day's high was here, but the fractal high is here. The last fractal high is here. So you can see here, and the fractal low is here. So the last two, fractal high and fractal low, you need to mark, and it actually happened. It opened a gap up. It happened to be a gap up open, but in some cases you'll see that it's not always the day's high and low. It will be there will be somewhere in between as well. So that is it, guys. These are the 6 price action strategies, day trading strategies that you can use for execution. And out of this, my personal favorites are previous day breakout, opening range breakout, open high, open low, and fractal breakout. So because these are considered truly as price action strategies, so you can just go and backtest them, and maybe you can just paper trade them with your short list of stocks, and maybe you can just try and use it if you like. The key here is being consistent. Consistency is the key. So be consistent with one particular method, master it, and keep doing it. And I want to hear what you think about this in the comment section, and subscribe to watch more of my videos. Thank you.